This account have started with only $3 and hopefully it will end up with $100 or more. But first, I want to talk about the realities of growing a small account. You see, most people, when we come here and we talk about trading, growing small accounts, most of the time people will show you trading profits. They will show you only when they do make money. But what you don't understand is that there are some times when these people, or me in fact, lose money. Actually, I would much rather show you, as I always do these days. Look for yourself. So this is an account that I deposited $5 wanting to do this challenge of growing a small account, and I placed my first trade, and guess what? I lost the entire $5. It's also happening here. If you are trying to grow a small account and if you are blowing that small account, it's also happening here. It's not like magic. It's not like I know some secrets that you can use to never lose money. No. It's also happening. It's only about how many times can you try again, how many times can you get the power to deposit another $5 and try again. And trust me, sometimes you will grow it, sometimes you will lose money. You can see from the account that I showed you below, I deposited $5 and I lost the entire $5 with one trade. Why didn't I use risk management? See, a $5 account is something which is too small for me to be bothering about placing risk management and placing a $1 trade for 5 times. No. I've come to a point where I've realized that trading always give you a 50-50 chance, right? Since trading gives you a 50-50 chance, if I have a bigger account, of course, I need to be risking 1%, 0.5%, just to make sure that maybe I make 2%, 3%, 4% and be done for the month, right? But then, if you have $5, if you make 1%, how much are you making? You can't even count. So what I do is, when I deposit for the first time, let's say it's $5, what I do is I'll put that whole $5 into one account, into one trade, and I have a 50-50 chance of either doubling it or losing it all. So 50% of the time I'm losing the $5, 50% of the time I'm doubling that account. When I double it, it goes to $10. But what I like to do mostly is let it go to like $12, $13, and then I close it. Once it go there, I now have a little bit bigger. I can now divide that by 2 and say, okay, in the beginning I had one chance. Now that I won the last trade, I have 2 chances, and I place another trade with half the capital. Now my risk tolerance is now at 50%. Now, if I win that 50%, that trade which is 50%, and it doubles again, now I have $20. I have now 4 chances. So the more the account grows, the more chances I give myself. That's the principle that I use. Now, you might say, okay, Courage, why do you put one trade and risk the entire $5? Why don't you use full margin trading, right? If you go to TikTok right now, there's a trend going on, and there's a lot of people who are getting caught into this full margin trading. Now, here's the problem with full margin trading. I've tried it before. Now, when you put full margin to your account, what happens most of the time is you are going to lose because of the spreads. Each and every trade has spreads. Each and every trade has spreads, and these spreads can multiply and create a big negative balance. And if you are on full margin, you will end up losing your trades even before the market even moves. You can see the market making a very small move, but your trade is being wiped out. Why? Because you are using full margin trading, which is very bad. Do not use full margin trading. If you want to use full margin trading, you can do it by knowing exactly how big the move needs to be if you are going to lose. But that's not what I do. Now, let me show you what I do myself. I will show you with the live trade that I started off with, taking my account from $3. Okay, now you can look at my account. I started off with $3 and now I have around $13, and I have 3 trades of the same pair, and I'm going to show you exactly how to do this. The first trade is $5, the second trade is around $3, and the second trade is around $1. So I will show you how I did this and what you can do exactly to make this amount of money. Now, if you look at this, you can see that I've been you can see the strategy that so in a minute I will show you the exact strategy that I have been using. So you can see that my first trade right here, I will close my first trade simply because I will probably close these trades because I have already made like 5-6 times my account. But you can see the way that my trades are looking. I will show you exactly how I did that. Now, for the strategy, here's what you want to do. Basically, you want to go to the 5-minute time frame. So I will go to the 5-minute time frame. Now, once I choose the 5-minute time frame, you can see that here the spread is too big. I'm probably not going to place a trade when the spread is this big, but then I will show you when I would place the trade. So firstly, I want to go to indicators, and then I will add the Bollinger Bands. When I add Bollinger Bands, I will put these settings: period to 20, deviation to true, and then I will apply to close style 3 like this. Then I will click save. If you do this, you are going to see that the Bollinger Band is going to come on the price. Now people know that if the market is ranging up like this and the market goes above the band, it will likely drop, and then this is when people try to buy here, try to sell here. But it doesn't work like this. Trust me, this doesn't work. I've tried it before. I've created a lot of strategies and I've shown you that this does not work. Here's what you need to do. You are not going to place your trades when the market jumps out of the Bollinger Bands. What you want to do is you want to catch when the market have momentum. And I'll show you an example. Now, so here's what you do. So let's say you see the market coming from the lower band right here and is going to the upper band, and it crosses above the middle band. It's going to the upper band. When it's about to reach the upper band right there, right, the market most likely is going to touch the upper band before it drops. Why? Because the Bollinger Bands is the averages of the market. So the next thing that you want to do is you want to buy like at this point right here. If you buy here, what is going to happen is the market is going to keep going to touch the band. Even if it reverses, it will have to touch the band most of the time. Not always, because you can see here it didn't touch the band, but it will try to touch the band. So when it touches the band right here, before it touches, so you want to buy before it goes to touch the band, so you are in profit. If it touches the band, you pay attention. If it breaks and closes above the upper band, you add another sell, you add another buy. Right? I will try to make this as clean as possible, right? Let's just do this. I will try to make this as clean as possible. I said, if the market is going to the upper band like this, and it crosses the middle band and it's about to touch the upper band, that's when you want to buy. That's when you want to buy, because if you know that if you buy here, if it goes up, right, if it moves from here to here, you would made like $2 up there, right? Because you're starting like with $5, you would made like $2 here, or $1.50 or something like that. When the market touches and if it closes above the upper band, you buy again. Now if this buy is in profit, this buy, if the market keeps going up, is going to add more profits right here, and one trade is going to end up having multiple profitable trades. Now the other good thing is, if let's say it goes up here and it starts to reverse right here a little bit, this trade might be losing, but the first one is still in profit. So I'm making this quite dirty. Let me clean up. Now I will show you more examples, right? Look at this. The market touches the upper band, drops, now going to the lower band, and you sell. If you don't want to sell before it touches, you can wait for the market to go below the band, and then it closes below the lower band, and then you start to sell. Now, one way that you are going to see that this is likely to happen is that when the market closes up below the lower band like here, you will see these bands moving in different directions. The lower band going down, the upper band going to the upside. This shows you that there's now a lot of momentum at that point. This shows you that these candles are huge, so there's not a lot of momentum. So you can wait for the market to close below the band, sell right there, wait for the market to move down a little bit. If the next candle again closes below the lower band, sell again. So you would sell here, again sell here. You could also, at the close of this candle, you could still sell here at the close of this candle, because it was still on the lower band, and then it went all the way up here, even though it reversed. But from this point to this point, I promise you, if you are trading a small account, you could have almost doubled your account. As you saw on my example, I did the same thing and I doubled the account. Now there's always, and I almost made 4 times the account. Now there is always going to be scenarios where the market touches the band and doesn't go, but it's few. Look, the market goes up here, touches the band, so you buy. You let the market go a little bit, and if you start seeing gap, this band going down, this band going up, it's more momentum, you keep buying, you keep buying. Now you don't want to be in the trade forever, because you're just trying to catch momentum for a little while before we move. Look at this, the market touches the low, closes below the lower band, so you sell. It moves again down here, you sell again, and then again here. So if you kept in the trade here, the market would eventually reverse, but up to this point you could have still be selling. And if it is a small account, right, don't do this with huge accounts. Here you are scalping to try to just catch the momentum and make money as fast as possible. Now I'm going to see here, look at this. When the market goes on the outside the band, it doesn't come back right there and there, so you would buy first, buy again, buy again. So the trick is to buy. If it does what you want, you keep buying, you keep buying, you keep buying, and then you scalp a few moments, but you add more trades on that. Hopefully that makes sense, guys, and what I talked about in this video really made you to think about, okay, these Bollinger Bands, I've been trading it in the wrong way, and this is a strategy that I've been using to take my account from very small amounts to try to make them bigger. Thank you for watching. If you want to see part 2 of me taking this account from where it is now, around $13 to maybe 20 to 25, I will do the recording. I will post another video, but let me know in the comments.